Let's face it, there have been billions of dollars that have been spent already in FinTech. And some would say, with, in some cases, little to show for it, really making an impact. Now, some more than others, but my first question is really around the financial institutions. What are they doing really well? And of course, there's a flip side to that. But let's just kick that off and talk about what are they doing well today that we should be thinking about and that the entrepreneurs in the audience should be thinking about. Dan?
Sure. So I mean, I'd start with challenging the premise a little bit in the sense that I think that for the amount of money that's gone into the FinTech, certainly the amount of hype, there hasn't been an enormous amount of game changing. So I certainly agree with that. But I think part of the problem is conceptual, meaning that we just tend to overestimate how much we can achieve in 1 year and underestimate how much we can achieve in 10 years. And I think that we tend to think of FinTech sort of subject to the hype cycle, which is how much money's been poured into it lately. So I think that to Michelle's point, it's still very much early days in FinTech and that we aren't always aware of that. When it comes to the other elements of the question, I think that what we underestimated in FinTech was just how much value there is in having a cohesive ecosystem, especially on the consumer side of the equation, where I can still get 9 products from my bank and it's still incredibly unlikely, despite the fact that FinTechs are becoming very good at solving a specific problem, whether that's in a remittance corridor or day-to-day banking or whatever that investing, whatever that niche happens to be. That value that's created in my life by having a cohesive place where I can access all of my financial products is still enormously important in terms of the buying decision and adoption. And so I think there's just an enormous amount of inertia that banks are carrying through to that, but we'll start to see some of that change in the next 2 to 3 years.
Alyssa?
I think another big thing is customer acquisition. So we've definitely learned that, you know, the banks in Canada specifically have a stronghold on the customer relationship. And it's taken, you know, FinTechs a while to figure out how do I find customers and how do I do it in a scalable and affordable way. And I think that's especially true in Canada. When we survey our customers, the number that still think when they need a credit card, they need to go into their bank and they want to consolidate their financial services at that same provider. And so I think that over time, as we experiment with more methods of customer acquisition and figure that out, we'll be able to disrupt. And I think it's also, you know, we've realized that it's not, we talk so much about disruption, but it's a lot about working with the big banks and leveraging their balance sheets and the things that are really hard to reproduce and figure out, you know, how can the companies that, you know, we're invested in technology, we move quickly, we understand the consumer, how can we work with the banks to make the most traction?
Cost of capital is a big piece of it. If you look in the US market where billions have been invested in FinTech startups in the P2P and personal lending space, and then you have Goldman Sachs enter the market last year for a fraction of the cost in terms of actual technology infrastructure, employee base, marketing, and you know they just announced that they've done over $1 billion in their first 6 months of operation, and so it really calls into question, you know, how easily, because of the scale, the lower cost of capital, et cetera, that the big FIs can actually enter the market and follow the FinTech innovation in certain instances.
These two companies in particular, you guys have approached the market very, very differently. Yours is a little bit quieter. You're going through partnerships. Yours not so much. Anything that either of you would share for the audience in terms of not to do? Anything that you've sort of, you know, for the entrepreneurs that you would say, you know, let's not do that one again?
Yeah, I mean, when I speak to the credit card companies or the big banks, and when I'm speaking to their senior management, what not to do, don't walk into the room and sort of share your data model and say that you're better at you know, assessing data than the banks, because the banks are sitting on a lot more data and they have a lot more sophistication when it comes to assessing that data and managing risk.
Yeah.
So don't walk in kind of guns blazing, focusing on you know how good you are at assessing risk. I would say focus again more on where they're not focused.
Do you use the theme of empathy to discover what drives your customers. In other words, what information do you use that would paint a picture of what current and future customers look like? Are you able to use data to understand customer motivations? Who wants to go first?
Yeah, I'm happy
Kevin?
to jump in. Empathy is one of our 4 cultural values at Credit Karma. We spend a lot of time talking about it and trying to deliver on it. One of the examples is, obviously in Silicon Valley, we all have, great paying jobs, generally pretty good credit, and that's not representative necessarily of our membership. There are plenty of folks out there that didn't always get good grades in school and are looking for ways to improve their credit score. So we actually did a partnership with the Center for Financial Services Innovation where we had to go into San Francisco and figure out how do we cash a check? How do we, go and transfer funds without being banked, so to speak? And it was really interesting experience going around the city, seeing the fees that consumers have to pay. Our chief product officer and his team, they couldn't even cash their check, and that was the first step they had to do. Like, nobody trusted them to actually allow them to get cash in hand, so they kind of failed the entire experience in some ways. But that's one way that we've invested to try and really empathize with our membership, who is very much interested in improving their credit and need the tools, the financial empowerment, the consumer education to enable that. But as you said, there's a whole repository of data in terms of how our members are engaging across our platform, whether that's by device type, the tools, the articles, the simulations that they're doing in terms of I'm about to pay down this credit card or I'm about to miss this payment and what that means for my credit score. All of that information helps us build more relevant, the next iteration of tools, calculators, content, et cetera, to help them make that financial progress.
Yeah, I mean, we talk about this a lot in our company, and obviously we operate in a relatively fortunate circumstance within the tech community, but just broad strokes, if you kind of divided this audience, and this was a cross-section of 30-year-olds in Canada, the middle and the left group would be living paycheck to paycheck and have less than $1,000 in their savings account, right? So, and we talk about that, one, because it motivates our team, and two, because that's actually who we're building this product for. But I think it's exactly right in the sense that empathy can get you so far, but where we actually have an operational and competitive advantage with that, and it's ultimately deploying the products that give us the data that let us know if this experiment is actually working, right? So empathy informs our experimentation, which then we use the data to drive the roadmap.
How are you catering to the needs of the millennials? Should we be doing more or less than we are? How does their unique views about human or customer experience affect how we should be designing? And I bring this up because I think we're all subject to what I'm about to say. So regardless of whether you're a fintech or you're a financial institution, you're very much living in the moment. Are we, we have revenues we need to meet, right? I mean, everybody's got their, short-term goals. Are we really thinking long-term about the millennials, and are we doing enough there today?
Yeah, sure. I'm happy to start. Millennials are a big part of our membership. We're closing in on about 40% of all millennials in the US are a Credit Karma member. And that's a statistic that we're very proud of and pay close attention to in terms of our development. There are all sorts of ways to address millennials. I'll just quickly touch on one of them, which is how we think about mobile. And when we say mobile first, we truly develop for the mobile app first, and then we take that experience and expand it to desktop. And we always talk internally about moments, because when you're on your mobile phone, and our experience with millennials is that they're waiting in line for their coffee or for the subway or what have you, and you need to capture them literally in that moment. And it's all about developing an experience that delivers a relevant insight in context that leads to a recommended action. And that action could be anything from a form of monetization to education, et cetera. And that's how we talk about developing for millennials and building relationships with them.
Helpful, terrific.
Sure. So I think we actually try and we're always kind of lumped in as banking for millennials, which we obviously totally understand. I'm sure we've all been X for millennials. We tend to make sure that we're cutting through that age demographic because we actually don't think it's super useful and dig into the psychology, which is effectively what you're talking about. And so one of the things that, and we're still figuring this out, but you know, the leading indicators of a really good customer for a millennial might be very different than the leading indicators for a very good customer who's a Gen X, right? So we get the luxury of sort of solving for engagement. And that means where are all the places that we can provide additional value in their life and provide feedback loops around you're saving and you're on your path to X, or this purchase created Y value in your life, whatever those things happen to be. But solving for engagement, which is, I guess, the byproduct of millennials. So. Yeah,
and millennials have, for the most part, grown up with Apple, who's you know, ruined it for everybody, right? Yeah. They set the bar extremely high, right? Yeah. And so, you know, I think probably has a lot to do with, you know, the expectation level, right?
That's right. And I think that because of that, they have a very different definition of trust, right? Like they don't necessarily put trust in an institution because they've hung a banner for 200 years or because they're really big. They put trust in it because it gives them a user experience that they feel like they're aligned with, or whatever that thing that makes them more amenable to a newer brand.
I think that millennials are going to be great for FinTech because, as you mentioned, they're willing to try new brands and put trust in financial services companies that don't have the same recognized brand. And they also have expectations on user experience. So when we started out in the savings space comparing rates, we would list the major financial institutions, and then people would see the great rate, walk into the bank, and get that. But now when we see new online banks, so EQ Bank is a great example, you can open a savings account while sitting at your computer. And so that's really exciting for us because now, you know, not only are we recommending products, but we can actually facilitate people getting those financial services and those financial products all from the comfort of their, you know, their desk, their computer, etc. And so I think that as it gets easier and easier to use these products and people are comfortable with different brands, they will, you know, have a much more fragmented financial services model. They'll work with many different companies because it's easy to do so. And I think that will just open the door for more companies.